All right, guys, here we have it. Sport in the world of Draftkings. We have the soaring Draftkings stock makes Israeli entrepreneur a billionaire. So we have our first billionaire based on ownership of this stock. I've been bullish on this stock for a long time, and here's why I think you guys should be too. It said Friday, DraftKings reported its first quarterly earnings since the first merger. It posted a wider than expected loss of 18 cents per share on revenue of $113 million, which topped analysts' expectations for the quarter ending in March. So shares, as we all know, Friday popped 15% since the company didn't expect any long-term impact due to the coronavirus pandemic. So getting into this billionaire, a lot of you guys are going to know it's from SB Tech. It says the stock minted the new billionaire Israeli entrepreneur Shalom McKenzie, who owns 34.6 million shares, according to the company's 13D filing with the SEC. Those shares are worth exactly $1 billion based on Friday's close. You guys know it's gone up a couple percent here the last couple days, even though today the S&P 500 was down 1%. DraftKings held steady after rising the day before. It says McKenzie, 43, who's 43 years old, founded the gambling technology company SB Tech, who obviously DraftKings just merged with in 2007. That's when he founded it. It just merged with the SPAC with DraftKings here. It says the company, SB Tech, has 1,200 employees, 10 offices around the globe, and licenses online sports betting and casino platform to state lotteries, horse racing companies, casinos, and iGaming startups. And this is so big for anyone who's looking at the DraftKings stock, is because this is why this merger with SB Tech is so huge, with the legalization of iGaming, to merge with a company with this background casino knowledge. The DraftKings didn't really have before. Now they're getting huge into sports betting since the 2018 Supreme Court case allowing companies to do that. So in states, make it a state-by-state decision, but as more states open it up. So, just the partnership from DraftKings to be able to go from fantasy sports to casinos and iGaming, and to have the backing with SB Tech is going to be so huge. It says DraftKings reached the public markets through the blank check company Diamond Eagle. They obviously merged under the DraftKings name. And it says the stock has been on a tear since the company debuted on the NASDAQ on April 24th. Shares are up 67%, adding $400 million in value to McKenzie's 11% stake. So as you guys know, the stock's up a lot, but I'm going to go in my next couple videos here onto why it's got so much more room to run and the long-term value of this company. And I'm going to specifically in my next videos compare it to FanDuel and why DraftKings is set to dominate this and make it a one market show here for online fantasy sports, and then eventually there's only growth in online sports betting, because DraftKings is starting from zero here, but it's only going to grow a lot. It says the Walt Disney Company is the third largest investor with a 6% stake in the entertainment giant, acquired through its $71 billion acquisition of 21st Century Fox, an early investor in DraftKings. So 21st Century Fox has known about this a while. Obviously, they do a Fox broadcast and everything of the NFL. And what I've read in a different article, which is so big, is because Walt Disney, with the 6% stake, is going to be a passive investor in this company, which means if you own stock now, Walt Disney is going to passively add to this. I don't know if it's going to be monthly or quarterly, but just think each year with the third largest investor in the company and at a 6% stake is just going to be dumping money into this company for conceivably the next decade or so, just constantly pumping up the value of the company and the stock, allowing your share price to go higher, but also the company to do more, like more advertising partnerships with the NFL and casinos and everything that they want to do with their iGaming and esports and everything else. It says the biggest reason why I think you want to get in this one is the stock rose 7.5%, previously last week on Tuesday when it revealed, and this is actually when I dumped a bunch more money in the stock too, is after I read this news that George Soros holds 2.7 million shares through his Quantum Partners investment vehicle. Soros is worth $8.3 billion after shifting $18 billion from his family office to his Open Society Foundation in 2018. Now, here's where I'm going to go into what could be conceived as a bias in investing called herding. And the herding bias is basically when people all jump in on something just to rush in on what people see as everyone else is doing it, I should do it too. And why this is not herding, I'm going to go into this in a lot in future videos, is because these guys know what they're doing. Soros, Disney, which is ESPN, obviously, all these other famous names that's going to get to in this article, Robert Kraft, and all these other investors, Madison Square Garden, is they know it's going to be a huge revenue maker and they're going to have huge earnings in the future. They don't have earnings right now, but in 5-10 years, it's going to be massive. And why this is not hurting is the perfect example I looked to earlier this year is, let's just pull it up now, is the company Space, which is Virgin Galactic. And this is the perfect example of hurting. And I'm just going to pull up the chart here. And you look at the last 6 months, look at this behavior right here of, this is exactly what you can look where my mouse is, the FOMO, the fear of missing out, pops in. You see everybody pile in, this is obviously right before COVID announcement, piling into Virgin Galactic, peak tier. I mean, this whole time before is floating around $9. And then obviously here's the plummet and the cliff and Corona, and it just hasn't really gone back. And it's investors getting ahead of themselves on something that's not a good idea. Space, in my opinion, this is just my opinion, has a limited ceiling on earnings and revenue because there's only so many people that can do space tourism on a flight. They can only charge $250,000 per seat for however many people fit on that plane, and it's a limited amount of flights they can do each year, so there's a ceiling there. But the ceiling for a company like Draftkings, it's just infinite because you can bet. I think the contests in the future are going to be infinite. They're already doing it on pop culture. They have had trivia games on Democratic national debates and Survivor and some of these other. You can bet on anything. The coin toss at the game, how long the anthem's going to be. And there's just conceivable infinite ceiling where a company, this is just, I just bring this up. I'm not hating on space, but to me, this is what herding is and why you jumping on the bandwagon because you find out people like George Soros and other people invest in DraftKings is not hurting, is because you're following smart investors. Like, that's what you want to do as an investor. I'm going to leave it as that here today. We got a newest billionaire in the world with McKinsey. I want to say congrats to him. Everyone who's out there making money, working hard, creating products. Let's not be jealous of these people. Let's just get on the waves. Learn from the best, try and make some money, go have a good day. Bye.